Hello, my name is Joris and welcome to my YouTube channel Joris Invest. Today I'm going to talk in this video about the most expensive and the cheapest ETF on the Swiss 6 exchange. And what are ETFs? So ETFs are exchange traded funds. I'm only going to talk about those on my channel from the 6 Swiss exchange and not the BX exchange. They are both situated in Zurich, but the BX exchange is actually now a part of the Stuttgart exchange. So I like also the site of the Six Swiss exchange a bit better than the BX exchange. And there are, I think, 1,200 more ETFs noted on the 6 Swiss exchange than on the BX exchange. So it's 1,618 ETFs currently on the 6, and there are 27 providers that are standing in for those 1,618 ETFs. And in this video, as I said, I'm going to give you the most expensive one and the cheapest one. So the most expensive one is the OSIAM Europe ESG Machine Learning ETF from OSIAM. It has a ticker C2MV. The Valor and ISIN number is also given on the screen, so you can pause the video and write it down if you like. And the price, which is of course the most important thing when you are talking about expensive versus cheap ETFs. So the price is, and don't don't fall from your share, but the first time that I saw the price of this ETF, I really was surprised that it was so high. So the price is 231,650 euros. That's enormously high. And then we go over to the cheapest ETF, and that's an ETF from Lixor, and it's the Lixor Daily Short DAX X2 ETF, and it's a accumulative ETF. The ticker symbol is LYDSD. Again, the Valorant is a number. When you want to write it down, you can pause the video now. And this notes on a really low price of only 1.626 euros for one share. So actually, if you look at it this way, for the price of one share of C2MV, so the machine learning ETF, you can buy 142,466 shares of LYDSD. So both of them started a while ago already. The machine learning ETF started on the 28th of November in 2013. It's a passive managed fund. Sometimes it's a bit tricky when you read the papers because they say that it's also actively managed, but in fact it's actively managed by computers. So it's for me it's passive. And the fee says it as well that it's passively managed because otherwise it would be a mutual fund and then it goes up to 3% even for an actively managed fund, but this one has a fee of 0.45% every year. It doesn't give a dividend, and the fund size is on the rather small side. It's 101 million. The Lixor ETF started a few years earlier on the 21st of September of 2010. It's a bit funny, that starting date, but I'm going to come back to that later. It's also a passively managed fund. The fee is 0.60, And if you know that the average fund on the six Swiss exchange has a fee of 0.30% in a year, both these funds are actually on the more expensive side, and where the one from Ossiam with 0.45 is actually still reasonable. A fee from above 0.5%, that's rather high, so there the Lixor fund scores a negative point. It also doesn't give a dividend, which is also given away by the name, of course, with a cumulative. And it's also a rather small fund with only 63 million euros invested in it. So when we look at the performance of the fund by Ossiam, all time it's performing rather okay, so 77% on a period of more or less 9 years, so that's really nice. The last 5 and 3 years, the performance is more or less the same, and that's because, of course, the crash came along because of the corona outbreak, and 1 year till now it's 4.8%, and year to date, so from the end of December, the 31st of December, till today, the 16th of May, it has a performance of minus 8.5% more or less. On the other hand, yeah, the the starting date of the fund gives it away. It's fall, the beginning of the fall, and it has done that since the beginning. Always fallen down, down, down. Only when some crashes occurred, it went up a bit, but yeah, it's really performing bad. So minus 97%. The last 5 and 3 years, it's minus 62 and minus 58. And then over what the last year, it's up 5.5%. And of course, this year, with the war in Ukraine starting, um, yeah, from February it's up over 24%. So from the 1st of January till today, it's up in total 18.5%. And that's because, of course, when it's in the name, when you short, then you speculate on indexes going down. In this case, it's the stocks of the DAX that need to go down. And of course, that happened because of the war in Ukraine. And yeah, this fund profits from that, of course. So how is it composed? The fund of Ossiam, it's 10 top stocks are listed here. So you have Roche, you have Nokia, you have GlaxoSmithKline, you have Eon, Pernod Ricard. Most of those funds, stocks you definitely know. And then on the other hand, you have LYDSD, and yeah, it tracks the DAX index. So it's 40 stocks, I think, in Germany, the DAX. It's double leveraged, and it's synthetically replicated in the fund through financial swaps. So right from the start, when I read this in the documents of the fund, I know it's not for me. So double leveraged, I don't like leverage as a small investor like myself. And then dealing with swaps, I'm not a I'm not a fan of swaps as well. You can do nice things with it. It's the same with options. I don't like options, but you can do really good things with options. You can secure your wallet for over a certain period, so that you don't lose too much money when a crash occurs, and you know that you will not have access to your bank accounts in the coming month or something when you're on a trip. But yeah, for me it's not really something I would like to invest in. On the other hand, when you look at the OCM's fund, yeah, Roche, GlaxoSmithKline, it's pharma, so they are really stable stocks. Also Nokia, Orange, Telefonica, they deliver a nice dividend. Nokia, I don't know for sure anymore because I don't follow it that well anymore. But then you have the semiconductor sector represented by ISML as well. You have Eon, which is energy. Pernod Ricard, it's beverages. Then Kona, it's what is it again? I think it's lifts and moving staircases. So when you go in a station or something like that, and there is a staircase going up, automatically, most of the time it comes from Kone. So who wins? For me, it's obvious. I'm going for the long term, not for the short term. It's of course a strategy that you can do. Um, buy when the war starts, for example, in Ukraine, you can buy instead of your normal ETF, you can buy into the Lixor ETF, profit from the the downgoing stocks, and then when the war is coming to an end, you can sell off all your stocks from that fund and put it into another ETF where you trust your money for the long term. But for me, I always go for the long term. So for me, it's obvious. The machine learning ETF takes it home for me. Unfortunately enough, I don't have the money to invest in it. Although unfortunately, I don't think it's something for me as well. It's too focused on machine learning. So yeah, it's in the name, but yeah, I'm not that keen on machine learning. It goes the sector has a future for sure, so it's definitely a sector that other funds that I invest in are investing in, but I don't want to invest my money only into that sector. So that's something else, of course. But as I say on the screen right now, do your own due diligence. Is this fund something that can complement your current wallet, or is it something that you are really interested in and believe in for the future? Then yeah, take a look at this ETF and go for it. But remember, it's really expensive, 230,000 euros. That's not for the poor savers like most of us. But if you have the money, it's perfectly fine to invest in it. But for the record, I certainly do not own any of these two discussed ETFs, just for being clear on that. And with this, I end my video. So thank you for watching and see you on the next video on my YouTube channel. Bye.